Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 7th of July. Now in the past 24 hours there's been a big shift back into safe haven plays. There were a clutch of data points yesterday which disappointed markets, where you started off in the morning with the German industrial orders, the ZEW disappointed, and then into the afternoon a surprisingly weak ISM services data which really did shift the market back into safe havens, where you saw treasury yields falling, you saw the Japanese yen gaining ground, and also the dollar as well. And that really impacted across forex majors, across commodities as well. So add into the fact that there was a big disappointment through the OPEC Plus meeting, and oil price fell sharply. So pretty much across the board we've seen this impacting, and the legacy of that is still weighing out today. There's a degree of support that's coming in now this morning, but will this continue through the week? Well, the focus I think today is on the FOMC minutes, and markets will be looking out for any taper timing hints and also outlook for inflation as well. But generally speaking, at the moment markets are still reeling from this move that we saw yesterday. So with regards to the INFINOX support and resistance table, that is at the end of the video. Now, in terms of charts we're looking out for today, I've got the dollar-yen chart because there's been a big correction back to key uptrend support, and that looks like a chance to buy. But also we're looking at the oil price. Oil price had a big shift lower yesterday, and could this be that we're looking at a corrective move building here on oil? And finally on the DAX, well, as I said, a shift back into safe havens hit the equity markets yesterday, and the DAX has broken a key uptrend. But is this time for a correction? So let's have a look at these charts. And onto the INFINOX MT5 platform now, and just starting off with dollar index, because we've had some mixed signals in recent days. We had the big bear key one-day reversal, or big bearish engulfing candle on Friday in the wake of the payrolls report, and then a big turnaround yesterday. But essentially, that resistance of the payrolls report 92.72 is still intact. So the mixed signal is still playing out through the dollar, but it doesn't look like it's ready to correct quite yet. Now, on dollar yen, we can see this big uptrend that's been in place since the beginning of the year, and it's retreated back to that uptrend. And I'll zoom in here, and you can look at the importance of that support of the 21-day moving average, also the uptrend support, also that key reaction low that we saw around 110.40. Market has picked up from there today, so you'd suggest with the RSI winding back to 50, this is buying opportunity time on dollar yen. We continue to see that the likelihood is that the dollar will outperform the yen on an ongoing basis due to the Fed and the Bank of Japan outlook. So subsequently we can see that dollar yen pulling back to this uptrend is a buying opportunity. It's going on the 4-hour chart. You can see that basis of support around the 110.40 level, key level there. So if dollar yen can now break back above 111 figure, I think it's back into swinging uptrend territory, and really is, I think, an opportunity around these sort of levels. And the oil price back at this long-term outlook, you can see this uptrend channel, but the big run higher that we've seen in the past, well, 2-3 months really, or 2 months. You can see that the oil prices come back to where we saw the uptrend resistance coming in, uptrend channel resistance coming in, but a massive bearish key one-day reversal, bearish engulfing candle yesterday really did turn the market around. And look at that RSI breaking down below the 60 mark for the first time in several weeks, and that suggests potential strain of that move. But you can see here the support at 74.10 area. That is the key level that we need to be looking out for if the market is going to turn corrective. At the moment, it is holding that basis of support, but potential for a corrective move, but little real sign that there is a decisive correction taking hold until that 74.10 level of support comes in. But if the market again now starts to fail underneath that 76.50 area, then you'd say that the pressure may start to grow, but certainly the bulls are in a little bit less strong position than they were. And finally on the DAX, well, I'll take you back one level here. You can see the uptrend that we've been in since, again, since February, sort of 5 months or so, 6 months, but now breaking that uptrend with the big move to the downside yesterday. But I've got this level here around this 15,450, which has held once again, and this morning held. But look at the importance of this support of the rising 55 day moving average, which has again come into basis of the correction of the support, and it's held. But the market is now in a much less bullish situation now. It's broken that uptrend, and it could now start to build what I see is probably a choppy sideways range. And you can see that with the momentum, with the RSI not really managing to get anywhere, 45 to 55 in the last couple of weeks, 3 weeks. So yeah, it's basically sideways ranging on the DAX now. Resistance coming in overhead around the 15,700 area. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Friday, where we'll be looking at how the outlook for risk appetite is developing. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.